Nancy Havens of Havens Advisors. Well, you know a thing or two about mergers and acquisitions and about arbitrage situations. Nancy, good to have you with us.
Thanks.
What's been going on in the world of M&A? I thought that, companies were so flush with cash on their balance sheets that we would see, mobile XTO deals every week. Hasn't really turned out that way so far.
We haven't had so many in the beginning of this year, but we still had enough. I mean, generally, January is not a great month for new merger announcements. Companies are much more involved in making sure their accounting is okay and all the year-end stuff is done. So we get a lot of mergers completed by year-end, and then January tends to be on the slow side. But we still had two different medium-large deals. The Novartis deal for Alcon is the total company size is actually over $40 billion. The public float is $10 billion. And also the unfriendly bid by Air Products for Air Gas, which is a $7 billion deal. All
right, we're going to talk about both of these. Let's talk about Alcon and what's going on with Novartis, because Novartis is really trying to acquire the shares of the company that it doesn't already own. It already has a quarter stake in Alcon, and it's entered into an agreement with Nestle in kind of a stepped arrangement to purchase Nestle's shares in Alcon. Tell us about that.
Well, Nestle bought Nestle had a 75% stake in Alcon, and Novartis bought a quarter of that in July of 2008. And they started negotiating in April. And as part of that agreement, there was the ability for Novartis to buy the other 50% at some point in the future at various prices, averaging, I think, around $180 a share, $181 a share. They have since gone and said that they are going to buy that remaining 50%, and they're in the process of trying to get antitrust approval, which will take a long time. It will take at least 6 months. And at the same time, they announced that they were going to offer the public a stock deal that at the close today was worth $150 a share. Now,
stock's trading above that. Stock's trading at $157.46.
Right. Stock's trading way above that because nobody believes that when they've paid an average price much higher than $150 a share to Novartis, that they have any business. And their most recent purchase is at $180.
You mean to Nestle?
Yes. Sorry, to Nestle.
Right? Novartis paying to Nestle.
To Nestle, that they have any business making such a low bid for the company.
So don't lowball the retail, the individual investor, in other words.
And on top, there is lots of justification for bidding more for a control stake, but this is still very, very high. And they also at the same time announced that they weren't going to go through the normal independent director route, getting an independent committee, getting their approval, but instead we're just going to cram it down if shareholders didn't like it. And so there's lots of litigation on that side of the coin as well. We believe that at the end of the day, it's going to be extremely difficult for Novartis to buy the public stake without getting the independence director's approval.
And maybe offering a little bit of a premium there.
They absolutely will have to offer more because they will not get it at $150 a share. So
now I want to interrupt you because I just want to get your thoughts. I don't have much time, about 20 seconds on what is going on. Air products and air chemicals and products bidding for air gas. It's an unfriendly deal. Do you wait to get more information?
The two companies know each other very well. I actually like the deal a lot. but I think it's going to take a long time, and it's going to have lots of twists and turns.
All right, we're going to have to leave it there. I want to thank you very much, Nancy Havens, coming in from Havens Advisors, also coming in with a broken ankle. Thank you very much.